In Chapter 9, we're going to be looking at tax credits. Learning Objective 1, Credit for Child and Dependent Care Expenses. This credit is aimed at incentivizing single taxpayers with dependents, but more applicably, both spouses as joint taxpayers with dependents to work and provide income for the household. It does this by providing the credit for household expenses incurred to help make that happen. Specific examples of a qualified expense would be daycare or nanny, housekeeper, cook. The expenses also need to be incurred for a qualifying individual. So one example might be a child, or more precisely, a person under the age of 13 that the taxpayer can deduct or can list as a dependent. The second would be a dependent that cannot care for themselves. So an example of this might be a spouse or perhaps one of the taxpayer's parents. Now, the amount of the credit is not going to be based on all of the expenses that qualify, but rather based on a percentage of those expenses that is calculated using the income of the working taxpayer. And we'll see a table later as far as which percentages are going to apply to which amount of income, but the percentages will range between 20 and 35%. The amount of expenses that can be used to calculate this credit is also going to be capped. So it'll be limited to $3,000 for one qualifying individual, or it'll be capped at $6,000 for the amount of expenses for two or more qualifying individuals. The expense is also going to be limited by the amount of income in which the taxpayers earn. So for a joint filer, the amount will be limited by the amount of expenses will be limited by the amount of income for whichever spouse has the smaller income. If the spouse is incapable of caring for themselves or is a full-time student, the code will also attribute income to them. Specifically, $250 per month for one qualifying individual for the amount of time they are considered either incapable of caring for themselves or are actively as a full-time student. So this would mean generally for a calendar year that a full-time student would be 9 months times the 250. If there are two qualifying individuals, then the amount would double. So it'd be $500 for the amount of time the spouse was incapable of caring for themselves and thereby the dependents, or as a full-time student for the 9 months for that span of time times the $500 per month. This is going to be the table that was referenced earlier. So for an amount under $15,000, you would get the maximum percentage of 35%, and then you would get a range over that span of 35% to 20% until the adjusted gross income reaches $43,000, and at that point, the minimum percentage of 20% would be used in the calculation. So looking at our first concept check here, it says Jamie is a single mother with one dependent child, Joey, who is age 7. She has an adjusted gross income of $75,000, and she paid $4,500 to a qualified daycare center for after-school care for Joey. Calculate Jamie's child and dependent care credit. So here, she's going to have paid $4,500 in expenses. She only has one dependent, so that's going to be capped at that $3,000 amount. And her AGI is going to be above that $43,000 threshold, so she's going to be at 20% for the calculation. So that will come to $600 for the amount of the credit, and that's calculated by the $3,000 maximum times the 20%. Concept check 2. It says Tom and Katie are married. They file a joint return and have 2 dependent children, Jack, who is age 11, and Jill, who is age 5. Tom has earned an income of $41,000, and Katie was a full-time student for 9 months with no income. And they paid qualified daycare and after-school care center expenses of $6,000. What is the maximum amount of a qualified employment-related expense that would be allowed for the child and dependent care credit calculation for Tom and Katie? So here they have 2 dependent children, so the cap on the expenses ordinarily would be $6,000. However, not both spouses are working full time, so we're going to use the lesser spouse to limit that. Here it's Katie. Katie does not have income, but we're able to attribute income to her because of two children, or two dependents rather. So it'd be the $500 times the 9 months. So the amount of expenses would be limited here as $4,500. It would also still use the 4,100 for the AGI for a calculation of 21%, but that wasn't what the question's asking for here. So concept check 3. Antonio is a widower and cares for his son Elio, age 4. Antonio has an adjusted gross income of $24,000 and paid qualified child care expenses for Elio of $2,900. In addition, Antonio received $1,000 of dependent care assistance that his employer properly excluded from Antonio's gross income. Calculate Antonio's child and dependent care credit. So here with one dependent, the limit of $3,000 per child, or per dependent rather, would not apply because the expenses are under that amount. However, because there was additional amount received for the expenses, we would reduce the amount of qualified expenses by that amount. So here we'd take $2,900 minus the $1,000 already received to get an amount of $1,900 for qualified expenses. And then because of the adjusted gross income being $24,000, if we take a look at that table, we're going to be at 30% for the amount to use in the calculation. So we would come to $570. That's going to be the $2,900 minus $1,000 to get our $1,900 multiplied by that 30%.